Hello everyone, welcome to another video. This week I got a lot of questions about REIT stocks, so in this video I'll show you 3 REITs that I think are attractive at today's prices and I think could make sense to buy now. As always, if you want me to analyze a specific stock, join my Discord chat. It is the first link down in the description, and every Saturday I'll make a video about a stock that was mentioned in that chat. As always, I'm not a financial advisor and this is not financial advice, so always do your own research before making an investment decision. So without further ado, let's talk about what I think are the 3 best REIT stocks to buy now in August 2020. The first REIT I am looking to buy is PS Business Parks, ticker symbol PSB. PS Business Parks is a REIT that acquires and develops commercial properties and industrial office space. They have 27.5 million square feet in the 6 states of California, Texas, Virginia, Florida, Washington, and Maryland. The company has what I believe to be a simple strategy that has allowed them to flourish for the past 22 years. The priority of this company is to buy properties concentrated in competitive markets with high barriers to entry and in the most desired industrial markets in the United States. These areas are those that have fared the best over multiple real estate cycles. There are a number of things that attracts me to this company, but the quality that stands out the most is PSB's capital structure. The company has absolutely no debt and entirely finances their operations with equity. At a time when most REITs are getting punished by the markets for not receiving rents while they have interest payments due, PSB can ride out this storm of rent deferrals since they have no obligation they must pay. In addition, they have one of the best credit ratings out of any REIT in the entire stock market with an A- rating by Standard & Poor's. PSB currently pays a 3% dividend yield, and while it isn't the best on the market, I believe this is one of the safest dividends of any REIT and one that continues to grow at 20% plus annually. The key to PSB's growth is their ability to retain cash flow and use it to fund new property acquisitions and redevelopments. Since they have no debt, all the cash they receive from rents is put back into finding new facilities and redeveloping industrial spaces to be able to charge more in rent. This strategy has worked as shown by PSB's 5.5% same park cash net operating income growth in 2019. This means that the company is able to receive more and more income from their properties that they already own, allowing them to increase dividend payments and to acquire more developments. Even though there have been some missed rent payments from PSB customers, they have an extremely diverse customer base which limits their exposure to any of the industries that have been hit hard by the pandemic, such as retail and food services. In addition, most of the uncollected rents have come from customers in California where the local government has impacted the collection of rent. In terms of valuation, PSB is currently trading at one of the lowest PE ratios in their history and currently have a price to free cash flow ratio of only 21. In my opinion, this is a very reasonable valuation for the company and I expect it to provide good returns over the next few years. The second REIT on this list is GEO Group, ticker GEO. GEO Group builds and operates private prisons and mental health facilities in the US and abroad. GEO is an interesting REIT because it is essentially part of a duopoly for prisons along with a company called CoreCivic. This gives them a huge moat since it's extremely difficult for another company to start building new prisons. GEO's top customer is the US government, which accounts for 46.5% of all revenue, and that is followed by the Australian government. This gives GEO an added margin of safety, knowing that over half of their revenue is from some of the most credit-worthy customers on earth. The rest of GEO's tenants are mostly state governments, which are also very likely to keep up with payments. This is super important for the company since it allows them to take on more debt and increase their dividend annually. Since GEO's stock price has been declining since 2017, their dividend yield has swelled to an eye-popping 18%. Even though GEO may cut their dividend at some point, since I don't believe it's the best way to use their capital, they have a solid history of dividend increases and will likely always pay a higher yield than their competitors. GEO's reliable customers also provide some comfort for the high debt levels on the balance sheet. GEO's debt to equity is at 2.78, which is considered high, and some are concerned that the company is taking on too much debt. Taking a look at GEO's debt schedule, they have very few payments due in the next couple of years. This gives them some time to get the cash together for 2023 and 2024 when the majority of their debt is due. Even though GEO seems like they have a lot of debt, their total net leverage ratio is a 5, which is around their historical average. Their interest coverage ratio is at a 4, so while this could be better, it seems like GEO is bringing in enough cash to have a cushion for their interest payments. Considering the reliability of their tenants, it makes sense for GEO to take on some debt as well, as it will allow them to use capital to grow faster. So why has GEO's stock price been falling? One concern is the debt levels, but another factor could be that this year is an election year in the United States. Every election, there's usually one candidate that has some harsh words towards the prison system, which creates fear around the future of companies like Geo. However, the truth is that reforming the prison system would take a lot of time and probably wouldn't impact Geo as much as investors are concerned about. If we take a look at Geo's stock price during the last election in 2015-2016, there was a huge drop only to recover back up nicely after the election ended. I think this could happen again as fears over widespread prison reform begin to subside. Overall, this seems like an attractive company for their dividend and upside potential, and I would take a closer look at this company if the management decides to start deleveraging their balance sheet. The last REIT for this video is Broadmark Realty Capital, and their ticker symbol is BRMK. Broadmark is a mortgage REIT, which means that this company offers short-term trust loans secured by real estate used to acquire and develop residential and commercial properties. Broadmark manages an active loan portfolio across 13 states and is growing to target states with favorable demographic trends. Broadmark is currently in an excellent financial position to navigate the current crisis. They have zero debt and $258 million in cash. In addition, their loan portfolio consists of only a 60% loan to value, which gives Broadmark a cushion in case real estate prices fall in the short term. Broadmark currently pays a 7% dividend, and the dividend is paid monthly, which has a certain value to a lot of investors. Even though defaults have been on the rise, Broadmark does not view defaults as a permanent loss of capital. Instead, most defaults are actually resolved due to low loan-to-value ratios and personal guarantees from borrowers. Management states that in the past 3 years, Broadmark has dealt with 62 defaults, while only 9% of those resulted in foreclosures. Overall, Broadmark is in a good financial position, and if they return to their normal valuation of a 12 times earnings multiple, we could see a high double-digit return over the next few years. So those are 3 REITs that I'm taking a look at in today's current market environment. As you can tell, I put a high priority on looking for stocks that carry a low level of debt, which I think will be an advantage as we go through this period of a weak economy. If you got value out of this video and found it helpful, be sure to hit the like button, as it helps my channel by pushing out my videos to more viewers. And if you want to see more videos just like this one, subscribe to the channel and hit the bell icon down below so you get notified whenever I upload a new video. Thank you all for watching, and I look forward to seeing you on the next video.